Hello, hello, hello. Welcome to Al Stock Trades. Boy, it's a privilege and honor to be here with you guys and talk to you guys about Clover Health right now. There's going to be a lot of great information here, so please hit that like button and don't forget to subscribe. There's a lot of information that we have here for you guys. I mean, this is going to be an important video. So we're going to go ahead and just kind of give you kind of a template of how this is going to go down. Is we're going to go through our hedge fund information. We're going to go look at smart money, dumb money. Then we're going to look at the equity hedging index, and we're going to look at some technicals associated with Clover. Now, a lot of folks are like telling me, probably like, whoa, hey, when did Al turn into a technical analysis investor? Well, I mean, I've always been that. Obviously, I use both technicals and fundamentals. I don't do too much on the nuances of technicals. I take the big picture because it's all about the big picture. And I like to apply it. Obviously, there's some smaller things I like to look at. So without further ado, let's go ahead and let's just overall just kind of review just the price action of Clover, of how it's been doing overall. So we're going to look at support and resistance lines, Fibonacci, sequence retracements, all the things that we normally look at if you are used to attending our technical discussions here. Please comment down below in the comment settings. This is a live. And if you're watching this not on live, comment down below under the video because I do look at those as well. So overall on the day, we're up 5%. If you go ahead and pull up, and we could do this through our own stock terminal, but everyone's used to looking at this, so might as well. Overall, NASDAQ, well, this is kind of old news here. This is for the next day. But overall, we're up 5% on the day. On the 5-day, we're 31%, and year to date, we're 30%, which doesn't make sense here, the 5 versus year to date. But yeah, so 30% we're up for the whole year. Overall, we're still 59% down on the year, and then the whole thing since inception, it's been 87% down. So obviously, you don't want to like basically burst your bubble there, but just trying to go through all of these right now. But overall, if you look at over the month or maybe 6 months, you can start to see there's some form of a bottom here. Now, I would be foolish, and I would be doing the retail YouTube community, as they don't have access to our private stock terminal here. I would do you a disservice if I didn't tell you something interesting. So overall, this was given out today in the morning, and overall, I just updated this right now. So if people don't understand what this is called the smart money, dumb money confidence spread. Essentially, what this basically is, very simply, is let's say, for example, okay. Oh, it's not for example. This is how it works. You sign up for a stock brokerage account. You basically give them your social security and everything about yourself, honestly, and you give them how much money you make. And obviously, they see how much your portfolio is worth. They take that data. That data is expensive. Hedge funds want access to that data. They want to know what you're buying. And this trading account, E-Trade, TD Ameritrade, Robinhood, Webull, they take this information and they would love to make money off of it. And they sell it, right? And just like how, for example, a lot of BS sponsors come to my email and say, hey, we would love to be on your channel. And a lot of them, about 90% of it, it's like literally BS. We have one of them, which I cannot wait to talk about. I just got to, make sure we do everything good with them. But just like that, Webull has so many people, Robinhood has so many people, and those people are worth their data, right? And people would pay a lot of money for that. So essentially, hedge funds pay for this data, and then they have data of what hedge funds do through SEC filings and all the dark pool trades. And overall, what you essentially see here is that smart money has been basically not participating. We're seeing an inversion. Let's go ahead and zoom in. Stocks are going up. What is retail investors doing? Retail is starting to pile on. Now, again, this is not directly for Clover. We don't have that data. And again, it will be very small. This is overall for the SPX S&P 500. So when I see this, I tend to be a little kind of cognizant of this. And what we can do is we can add a 200-day moving average on our next video. So if you haven't done so, subscribe, please do, because there's a lot of great research. There's a lot of money being spent to basically provide this research here. And, this is like, unfortunately, you can't find this anywhere else. I'm sorry, it's like that, which is why we created the channel, right? And also, if you do subscribe, it does help, because then once we get to a sufficient subscriber count, then we will be able to add more interviews like economists and whatnot, and all of these things from universities to essentially give us more insight. So it'll definitely be well worth for our community here. So, when I see this, I tend to get a little kind of scared, not scared, but just cautious. Okay. So there's that. So just understand that smart money in blue is starting to cool off. Dumb money is erected. As you can see, there's a big erection here, right? There's a big erection. And if you go ahead and look up Tesla stock, you see an erection. Okay. Palantir, erection. Clover, obviously Clover has a bigger erection, right? All right. There's a strong increase, right? Which is reflective of what smart money, dumb money is doing right now. And what's interesting, if you go to my Twitter, I like to kind of retweet a lot of things here, but I don't know if I retweeted this. This was just a couple days ago. Goldman Sachs to lay off 3,200 employees this week after cost review. Not just Goldman Sachs. There's a lot of people laying people off now. BlackRock just laid people off. BlackRock laying people off. BlackRock cutting 500 jobs after recent growth plans. So there's a lot of things that are happening. This is a day ago. So just keep track of what's happening. Like Wall Street will tell you one thing, and then they do something behind. So words, actions speak louder than words. Okay. All right. So there's that. Okay. So that's good. So we went over the smart money, dumb money. Now we're going to go ahead and go to the equity hedging index. Hedge fund exposure. We'll explain what that means on another video. So overall, this is the equity hedging index. And what we're basically doing here is every time the equity hedging index is in the peak here in like 80 or above, we see that it is the greatest opportunity to essentially purchase equities. And what you can see here, this is the 2009, the great financial crisis in 2008. We had another dip here. We had another dip here when the Fed started to rise interest rates. And then we had a well, not rising interest rates. There was a fluke. They were like saying, "Oh, we should definitely do something," and then they stopped doing it, and it didn't affect the economy. But needless to say, equities dropped, and then there was COVID, and here's a peak, and then now obviously we have another peak here, right? And now we're starting to drop off. So if you zoom in on this, we are starting to drop off here, which is good, right? Once we drop off, it's obviously a bullish indicator. Now, again, it's very hard to take this data and summarize it. So what you can do is you can add a 200-day period moving average, not only for the 200-day period moving average for the S&P 500, but you can also add it down to the bottom here, into the equity hedging index. So you're taking the data and you're using some statistics to essentially find the average. And we're going to do these nice, smart things here to essentially give us more information. So what you can see here, every time we bounce off of this, and we go over the 200-day moving average, it always precedes or indicates that there's going to be a recession or a bear market. So you can see sometimes you get a false signal. And again, 2013, 2014 assets did technically drop, if you don't remember, in 2016. So I like to look at this as almost like a prognostic 10-year -2, or 10-year minus the federal funds rate recession predictor. Now, if you don't know what that is, we have a course that we teach we teach all that, and we're going to put up more videos, and it's lifetime access. And overall, what you basically see here is we saw a increase, and again, many signals to indicate that we are getting a little over leveraged. We got a signal here. We got a big signal. We literally popped off here, and then that preceded the 2008 little bear market we had when stocks were down a significant amount, especially Chinese stocks, the Trump thing that happened. And then we obviously crossed here, the 200-day moving average. And if you zoom in here, that literally cross, if you were, inclined to it, if you literally graph this up here, it literally was at the peak. I mean, just look at that. Look how sexy this is, right? And now we're starting to go down. So I speculate that once we go ahead and cross this, or once we start going down, we can do more indicators that are more instead of the 200-day, we can decrease the indicator size and maybe do an exponential a simple moving, and not a simple moving average, but an exponential average, and we'll be able to find a better analysis to essentially be like, okay, this is when this crosses this, hedge funds tend to really go in. But overall, we are touching the 200-day, and now we're starting to create a new trend line. The question is this sustainable? More people, a lot of analysts are saying, hey, we could drop another 20-30%. It's something to keep account of. But I just wanted to show you this data because unfortunately, no one's talking about. No one uses, no one has access to this stuff. Especially for the retail community, and we want to basically show it and share. Okay, so there's that. And again, when I say technicals, this is kind of a good dive view of technicals. But now let's go open up our stock terminal. And just a quick thing, let's go ahead and go to our dark pool. So let's go to our dark pool levels. We can just kind of copy this command here and type in Clove to see if there's anything available. So $1.13, we have 472,000 shares, not million, but for about 500,000 shares being purchased in the dark pool at $1.13. So you could write that as a support line. We'll see potentially if that would be. But overall, let's go ahead and open up the chart section for Clover. Let's type in our symbol, do the daily, and then we'll look at the past days, and we'll do a couple. We'll do 700. Okay. We'll do 700 days. And then what we can do is we can do let's do the past 60 days. Make sure we type in the ticker here. All right, good. So let's go ahead and open up our interactive charts. These are all interactive here, and we can go and it pre-graphs this. Let me just make sure it opened two interactives. Let's just start with the first one here. Okay. So overall, this is obviously, there's a lot going on here. Again, for people that are first watching us, this is essentially the resistance lines, support and resistance line. Let me just make sure. This is the purple here, excuse me, are the support and resistance lines. Obviously, these are resistance lines. The bottom here are more, down here are support now because once you break past support lines, they become resistance. Technical analysis 101. Here's your MACD and your RSI. Obviously, 30 is definitely oversold, 70 is overbought. Your generic things that you learn literally the first day when you learn about technical analysis, and you're like, oh wow, this is pretty cool. All right, so this is your 200-day, and once you cross that, it's definitely a bearish signal. If you try to go over it and you basically fail, it's a bearish signal. When you go over it and double bounce, it's a good signal. Obviously, you might ask yourself, hey, Al, why your graph is effed up? Why is there not excuse my language there, but why is there no 200-day here? Well, because the stock wasn't alive that long, okay? It was a baby, okay? So now let's go here. This is the Fibonacci sequence retracements here. So overall right now, ladies and gentlemen, we're basically seeing here very, very elegantly is that we just basically crossed the $1.22 average. Now, again, I believe we crossed this in the after hours. We did not cross this in the session for trade in terms of actual trading. I think, correct me if I'm wrong. I was unfortunately in the operating room. So, well, I mean, fortunately for me, I love the operating room, but I cannot give you the data. I just didn't see it. But if we did cross during operating times, like in terms of stock market, that's actually really good. We just basically crossed this resistance line. The next resistance is $1.68, or more close to the Fibonacci sequence retracement, $1.47. So you look at those, okay? So overall, let's zoom in here and let's kind of see. So you see this little SMA 200-day, SMA 20-day. We crossed that. And then we literally bounced, and then we bounced back down. And look at that. Now the 20-day SMA is our support, and the 20-day is $1.01. So that's really good. But just keep in mind of the data I told you earlier regarding smart money and dumb money. Just kind of, you got to take in all that data. That's why I love, fundamentals and technicals. It really tests your ability to generate an investment thesis and take in many different types of data and be able to market it. And this is just, it's pretty impressive. Okay. Now, another thing. Okay. Thank you so much. Yes. Close at $1.18. So we'll see tomorrow what's going to end up happening. Now, again, a lot of traders are active in this market now. Okay, so most likely a lot of traders like to cap out and sell on Fridays, extending into the weekend. And just remember, Martin Luther King Day is on Monday, so just keep that into it. Okay, so that's essentially interesting to see there. And I just wanted to just tell you guys, I really appreciate you guys subscribe to our channel. It really is nice to be able to help and make a difference. I just got really tired of retail investors losing. It's just kind of, you just get tired of these things. The reason why I make a deal about the specifics of when it closed and when it didn't. In fact, if you look at here, was it January 12th? It tells you here, open and close $1.21. I mean, maybe it did close $1.24. Is because sometimes in the after hours volume is low, and you can easily manipulate the price, especially when the market cap is quite low. Now, you might see this when you're looking at a $50 to $100 million market cap, but overall, that's that analysis. Another thing is a lot of our members. I'm just very honored and blessed. The discussions that we have here is very high level. I do want to point out something. It's take it for what it is. It's really it's sad, but yeah, we have one individual. I really love his due diligence. He said he posted. Let me just where is he? I don't know if I hearted this. Oh, sorry. Let me heart it. Let me start. I mean, it's sad I'm hearting this, but I mean, this is the reality of things. This is a customer, a client of Clover's. So does anyone have an issue with healthy benefits Clover Health? My 91-year-old father had a $125 quarterly benefit, which could be used on over-the-counter medications and food last year. This year, they lowered it to $30 a quarter, and it can only be used for OTC, over-the-counter drugs, right? So why are they taking food out of the mouths of vulnerable elderly people, especially when all food and needs are doubling in price? What can I do to have this issue heard and answered? My dad has help from me, but what about those who don't have help? Who can I address this problem to? Now, unfortunately, this is a thing that the senators and House of Representatives need to take on. Unfortunately, a company as small as Clover is trying to expand market share. Its shareholders communicated to them directly. The Clover's heart is pure. They tried, you know what I mean? But Wall Street changed its incentives. Retail investors changed their incentives. And unfortunately, now we are prioritizing profitability because, it's either Clover goes under and not able to basically utilize their Clover Assistant and spread their mission, which is to improve the needs of every patient live. They would have to decrease it. So the reason why I show you this on the stock market channel, you have to understand my heart aches because I'm in the healthcare field setting and this hurts me. But I'm also a business. I'm also in business, so I understand maneuvers like this, and that's why it's very hard to do this, especially when you're helping patients. But in order for Clover to survive, this is a much needed thing. So overall, you can go ahead and just look at in terms of Medicare and needs to reimburse these people, Clover, for these types of incentives, because unfortunately, Clover can't take the bill anymore, right? But overall, if you look at it in terms of 125 minus 30, they're saving what, $95? $95 times 4, they're saving about $380 per person. Let's say multiplied by 250,000 lives, that's around $95 million right there saved, right? And these are things that they haven't even told us about. These are just things that we caught on with our due diligence that we have on our private stock terminal. That right there are just one thing that they're doing. We don't even know the other things that this new CFO, a very strong, elegant, and I told you about this CFO's power that he had before he moved to Clover, his track record, and you can see that this company is. What more do you want, guys? I mean, this is what you need to see in a company to become successful. Okay, so here is that. So that we went over this. I'm going to keep this on a little bit as I answer questions, because sometimes people for me, I'm a slow reader. That's why I have a speed reader here. Watch. I hear. I don't know if you can hear this. Let me see. Yeah. Anyhow, I don't know if you heard that, but I tend to use that to help me read faster. Okay. I'm just kind of scanning the questions here. So there's a lot of videos I made about, like, in terms of, so I don't give out any like stock advice. This is a financial education platform. I present essentially the data. I give you sometimes my opinion, but I just present the data, and then you can follow the data with your own due diligence, and then you can make your own investment thesis. Again, this is this goes in line with your question, and I appreciate your love for our due diligence. Just curious what's the motivation is. Well, the motivation is quite simple. So if you go ahead really quickly to answer the question, if you go to our website, here's more about my story. If you go down, this is me. So I started off really humbly. Unfortunately, my father had PTSD, and it was a very abusive childhood life. I was homeless at the ages of 15. I started with nothing, and now I have 3 degrees, now going on 4, which is my master's in cellular molecular medicine. And I'll be graduating with my medical doctorate degree next year, literally. And I'll be a medical doctor, aspiring to become a brain surgeon. If you go to alstocktrades.com, you can hear more about what I do. I received the 40 under 40 most influential in my city and state. And here's an article that talks about kind of what essentially my story. So so why okay, so why does this tie in with the stock market? Like, why? The reason why is because I created a nonprofit, and it's a food program that distributes millions of pounds of fresh produce to underserved minorities and homeless people and people that live in food deserts. During the pandemic, a lot of people lost their jobs. So many people needed money and needed food. So our sites now literally started servicing people all around Mesa, Arizona. We even got people from Native American amazing tribes to come down from Tuba City and then go up there to give the food. But here's the problem. I saw that I hit a ceiling. I mean, obviously we are expanding, we're doing great, but I hit a ceiling because as I was helping and giving out food, and I was delegating and doing all these amazing things. You know what was happening? The stock market was going up. Chairman Federal Reserve, the Jerome Powell decreased interest rates, and the stock market was going up. And then you know what I saw? You know what killed me? The rich were getting richer, and the poor were getting poorer. The rich were getting richer, and the poor were getting poorer. And throughout all my education, the public health education I went through, I have a medical sociology education that talks about the haves and have-nots and the social determinants of health and all this. I've learned it's all just it's BS without learning about financial literacy. If you don't teach people how to make money, if you don't teach people how to essentially, get to that next level and study billionaires, which is why in our stock terminal here we have all, and I can show you. You can take a screenshot here, and you can do the due diligence here. We have there's where the hell is it? My apologies. Here it is. Brain Machine. Here are all of the billionaires, and we have their CIK numbers so you can inject them into Brain Machine. These are all the billionaires of our time that follow this investment kind of journey of Warren Buffett and Benjamin Graham. And essentially, what that's the motivation of this. The motivation is essentially to be able to help the retail community, and hopefully people that are 18, 19, 20 years old, that this is exactly how the wealthy get rich. And unfortunately, this is not taught in schools. Go figure. I always question myself why, but I'm starting to become more cynical in terms of the system. And I feel like now I'm starting to believe the system just wants you to be poor. The system wants you to work 9 to 5. I feel like I'm spreading conspiracy, but it just feels that way. You always have to plug in at, from your 8 to or 6 to 6 or whatever. And it's unfortunate. It really hurts me. It pisses me off. I have a heart of a physician. aspiring physician. I'm not yet a physician, but I'm working hard every day to get closer to my dreams. And it just hurts me because I'm working in a system that is designed for people to make money at the top, but essentially designed to give people essentially unpreventative wise medicine, and it just hurts. So that's why we created this. Okay, all right. So there's that. So analysts still a price target range. So yeah, so actually that's a good question. So if we go ahead and go to analysts really quickly here, guys. So we go to DD and go to analyst price targets for Clover, you can kind of see a map of, and analysts tend to do that when the stock price goes up, they tend to they have a higher stock price. When the price goes down, they lower it. So overall, yeah, so this is a graph here. Obviously, this is the stock price. You guys know it really well. And then the blue line is essentially the price targets of analysts. I think this is Whit Mayo there. I think it's Whit Mayo, Mr. Mayo here. But overall, these are the price targets so far, and we're gonna as it basically increases, we're gonna start seeing price increase in analyst price targets. I would be interested to see the SEC filings regarding institutional ownership. Okay. No, I appreciate it, man. Yeah, I don't really talk about it much. I put it on the website for people that are interested, just so you know, just so you know a little bit about me, because it's like, okay, who is this guy? Why does he have the software, and what is it about? And you can communicate to we have some testimonials here and all that. Everyone who enters our group, they're not upset. They're very. It's I take this job extremely seriously. I take this extremely seriously. As much, I take it really seriously. And it's this is my way of being. I mean, imagine I'm in the operating room, learning how to save a life, and then outside in the real world, I'm my software and my brain is being disseminated to help people, and it's just consistent service. I mean, what more can you ask for in this lifetime? Yeah. It's creating a great platform with like-minded people. Take a look at it. Promise you it won't be exactly. Yeah. And that's my goal. And when you align your goal with God, and this might sound cliche, you know what I mean? But go look up Denzel Washington. When you put God first, there's nothing you can't accomplish. But that's what we're doing. That's what we're doing. But to overall, this is what we have. One thing I do want to talk about is just kind of the short-term technical analysis really quickly here. Sorry, here it is, this terminal here. This is the short-term technical analysis. So we can just open up this interactive here. And, it's the same thing here. This is just, again, I like the long-term because it shows you multiple resistance lines and the support lines. This one's kind of like in your face. It's a nice zoom in. It's really good. I like this. Okay. And it gives you a different pattern. You don't use the 200-day moving average. You can this is still daily charts. So you could only use them on daily. So make sure, you listen to that. Overall, the next level of resistance, and also gives you different Fibonacci sequence retracements, is $1.25. Once we pass that, $1.27. So you want to go ahead and continue doing multiple days and write down the support and resistance and just kind of track that. And you can essentially, a lot of folks, they day trade off of this. And a lot of them, honestly, they use this support and resistance lines here. When they do their stock research, they pull up the support and resistance lines. Let me see if I can find them here. There it is. So we can go here and we can type in Clove. We can do the weekly chart, and then it gives you a pre-printed graph here, and you can follow it. But honestly, I like to look at the depending on what you do. You can look at the day. You can also look at the minute too. But this is you can also look at these resistance lines here. We just basically crossed $1.23. So you see how that's amazing, and you see how it's people, you can use this to essentially help you. This is an easier diagram to look at. So you see there. So we just broke that. So now you graduate yourself from minute to day, right? And so that hopefully that helps. But yeah, no, it's a privilege and honor to help you guys. But yeah, that's all I have for you. Sorry, long video here, but just again, there's just a lot of important things to discuss in the future on the next upcoming videos. We can go ahead and break down our smart money, dumb money. This is a big deal. There's a lot of information here, so we'll just make dedicated videos about these just so we can drive home the point. Good. You have convinced me to stay long in a position, even though it's yeah. I mean, he's just waiting. If you look at the all in podcast until stocks go up, so we'll see because they are technically are, but we'll definitely see. He still has position. But yeah. All right, guys. Well, hey, it's a privilege and honor. And is there somewhere that you take email questions or private messages? Yeah. So we have in terms of questions, we have on our stock terminal here. We have questions over here. You can talk to me directly. Also, I mean, I engage in all the channels. Okay, that's funny. we joke around here, but I definitely engage to all the questions here and comment down. So you can I'm on here 24/7 here. Also, we have our email as well for people that have questions about our platform. My customer support specialist handles those. All right, guys. Well, that's all I have for you. It's a privilege and honor, and God bless you. Stay safe, and yeah, this is good. I mean, it's going to be a great year. Again, my outlook is still 2025 will be a great time for the stock market. That's my outlook. I'm still a bit cautiously optimistic, but we'll talk when I talk about long term. Those are more fundamental analysis videos. I love fundamental analysis. In fact, I prefer fundamentals over technicals, but I use technicals to assist me, almost like the short term GPS. Okay. All right, guys. Have a wonderful day and good night.